Hey guys, this is Simon with Trade and Perform Coaching. This is just a members only review. I'm going to do the quick legal disclaimer here. It's not really a review, it's actually a preview for tomorrow. I want everyone to be aware of the critical areas. Okay, so important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential reward but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in futures and options markets. Absolutely do not trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this channel. The past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading in any financial instrument. So, done with that. As we speak, we are trading all the way down at 23.8275. That's right here, and current Globex low is 23.79 and a quarter, which puts us right. View, toolbar, tools. Where did the drawing tools go? There they are. Or not really. View. Well, they usually jump somewhere. I don't know where they are. There they are. Okay. 79 quarter. Makes perfect sense, right? So this is last week's low. So what I want to do is start with a large picture and go to a small picture. But before I do that, remember the number one rule, the most positive feedback I've gotten from literally everyone I've been involved with, okay, is don't draw down, don't trade unless you recognize the environment, okay? What that means is take a trade that you recognize you're willing to take a stop on. Perfect example of that was today. When we came in, we had the, let me see if I can fix this. There we go. Okay. We have we're in the 50-60 retrace here, right? Biggest negative tick of the afternoon, right? And that fails to close below the prior swing low, which was right there, and we hold above the 50-60 retrace. And I pointed it out in real time. I said, hey, that's a nice tight stop. It's right into the 62 retrace, and it resulted in a 3-point rotation back up. I didn't expect to see that. I didn't know we were going to see it, but when I saw it, I recognized it, and that is the essence of what we are waiting for in terms of being able to grab a trade or not grab a trade, right? So the other thing I want to remind you of, clearly this news event has the potential to be important, right? Because the futures are selling off, but they're not selling off dramatically, right? We're trading at 83. We're trading at 97. It's 15 down. We could walk in and have it be flat tomorrow. As a matter of fact, I would consider that pretty bullish if we did open flat or if we gapped and open drive higher, right? The point is the environment has changed. Perhaps this will bring in the volatility that we've been waiting for and looking for. My prayer is that that is exactly what happens. But that doesn't change our objective. What we are looking for is rotations down of 10 points or more, 5-minute tick divergence, right? We are looking for impulse moves up with 50-60 retraces with pushes back to the upside, right? And then we are looking for tick pushes lower, consolidations at the lows that are unable to break. That is what we are looking for. And the only thing that might change is if we see that it can't lift, the short side might actually start to pick up tomorrow. So that's what I would add. So let's go look at the bigger picture. Here's ES. And here's the S on the 24-hour. Okay, so the first thing you will notice is when you look on the 24-hour over here, so this is live and in real time, right? You can see we're still into what has been the bottom of support, right? That 2380 to 2375 has constantly acted as support. So what I'd like for you to put in your notes is that unless we get an impulse move below 2375, right, nothing has broken. And by an impulse move, I mean we trade to 2360 and then come back and backside test 2375, then it would be a short. That would look like, right, that would look like this, and then all the way back up here, maybe that sets up a short. Secondly, if we break this range and we close back in, that traps us and sets us up for the potential to come back to the upside. That can and should be considered a good possibility of happening, right? Do not reject the idea that we can go back up. Don't believe the hype, okay? Don't buy into the news story. We have seen 100-point rotations in Asian sessions on both the election and on Brexit, only to have the market fully recover. Do not be surprised by a mirror image move where we come all the way down and come all the way back up. Don't get caught getting run over short in this, okay? Be very relaxed. We know what we're looking for, and we'll find it as we move along. But don't be shocked and don't get into the mindset of the mentality that you have to fight whichever way this thing is going. We will get our setups, right? Have in your mind a push back above, 50-60 back for a continuation higher. We'll be looking for this tomorrow, right? 10-point rotations with tick divergence, right? We already know in the overnight session we have 15 points, so maybe a little bit more than 10 points. Let the price action set the scale for you, okay? Next, we want to check on the 24-hour when we come in. Where are the key support levels on the 24-hour, right? And they're distinctive from the RTH. So the first thing that you'll notice is that we found responsive buyers at the very tip of this poorly auctioned area. We came into the 80.25 to 78.78, and we pushed right up out of that. You'll see that we've gotten support at that level numerous times. 1, 2, 3. We've overshot it a few times, but for the most part, on a 24-hour basis, this is giving us support, right? We also know that we're trapped back down, and this is going to be key. See how this 2390 to 2391 acted as both support above and as resistance below. So 2388 to 2391, please write that down, even though it's not a specific zone, although I may have it as a zone. Let's go look. $23.88 to $23.91. See where all this stuff is smacked up against each other like spaghetti strings, right? That represents this area right in here. So then what do we have that's below? We have this HVN from the 24-hour. Okay, we have a low volume node right here at 70 to 71. And there is also from the RTH, there is a, let me make sure I got this right, but I believe there is a naked volume point of control at 2370.73. Okay, I expect, and this ends a poorly auctioned area in here. Okay, so all of that is really important to realize in here, is that from the RTH, that 2370 area becomes really critical, right? Behind that 2370, we have this little lip right here at 65, 67 essentially. That should provide some responsive buying. There is a gap, right, on the 24 hours, right? So this 66, I want everyone to write this down so you hear me now, right? I'm trying to make this as quick and as sharp as possible. This was the low from the gap on the French election, the first time when Marie Le Pen and whoever actually won went to a runoff. Okay, this was the gap. This 66 held. That is an important area. I want to repeat, 2366 should get responsive buyers. Okay, after that, this is unauctioned. The mid of that gap, okay, the mid of that gap, so these are the areas below 2370 that I don't have done. I'm doing them right here. 2360, 50 is the mid of that gap. It should find responsive buyers first time in there. It could sweep, but if it's going to find responsive buyers anywhere in the unauctioned area, that should be the location. And then finally, 2355.50 to 2352 should find responsive buyers. Now, that same chart, so everyone, that should mark that in your notes. That's off the 24 hours. Off the RTH, okay, again, 2380, 2377 has found consistent buyers. There is a gap here. This half gap, this 2375 is already held, and we got a response back up. So there's another gap right here, right? The mid of that gap, got a feeling it's going to line up identical. It's a little bit lower, 2359. So 2360, 2359, that area in there becomes very important first time in, right? Expect potential response back up, right? Remember, this is unauctioned, but it doesn't mean that it can't bounce within that unauctioned area, and it would be mega stretch from 97 to 60 is almost 30 points, right? Finally, we get back in here, and the only distinctive HVN is sitting right here at that open gap at 2347. If we get down there, we'll worry about it. I seriously doubt that. Doubt that we get down there tonight. However, so trying to think if there is anything else valuable I can share for tomorrow. Oh, don't be in a rush, right? It's just one day. Notice in the first hour, are we getting counter rotations up and down, or is it all directional? When you get a drive lower, this is really perfect, right? Notice here, this evening on the 5-minute bar, notice from the time the news broke, see how we can't trade above till right here? This is the first point where we can trade above a 5-minute low. Then we start that process over. We can't trade above, we can't trade above, we can't trade above. We can't barely trade above, a hair above, right? We can't close above specifically, right? So if you look here, right? Okay, this was a clue that we might start getting two-way action, right? What's the problem with that? Look at the overall angle of attack is greater than 45 degrees, right? We want to see that broken. Now watch what happens when it gets broken. See right here where it finally, so pretend this is an RTH. See where this finally gets broken? So a couple things. See the momentum trade over there? The momentum setup? We break. We impulse move lower. We get overbought right here. See that? First oversold bar, that's at 1830, was at 6:30 in the evening, and you get an immediate rotation down. So first thing is, this is a perfect example of momentum trade to the downside. That was worth 2390 all the way down to 2386, or if you got the extensions lower, right? Then also notice, after we got back, right, so this is my last point of a swing high right here before we had another impulse move down, and we finally close above it over here. So look at where the market finds support, right? See how we go into a sideways consolidation? And now that 50 retrace is acting as support. This is important because you can use this as a mirror for what the market should look like tomorrow, right? What we're looking for. We can wait, allow the market to really panic itself down, and then we start getting these moves into the 50 retrace. And as long as this holds this 62 retrace right here, you have a chance of rotating back to the upside. The other thing, NQ is much stronger than ES. If you get tick divergence in ES, you might want to consider putting on some NQ because it's likely to get a stronger push to the upside. We are also looking to see if NQ and ES align. What else can I cover in here? Really, that's about it. I don't have anything else. I'm tired. I wanted to come up and make sure I had the zones right. You can review them and go back over them. It's one day. I don't see a need to trade in the first hour. We should get trading opportunities after the first hour tomorrow. My guess is both that if we're having volatility, both short and long will work, right? And it's going to be a change. We already know it because of the rotation size in Asia, right? We have a potential change in character, right? So let's see what that change in character looks like and adapt to it. All our goal is to pull 2, 3, 4 points out of the market, right? It's not to be superheroes. It's not to nail the trade. It's not to be perfect. If you can do that, that's great. But the primary objective is to relax. So come in and understand, hey, I have no idea what will happen. I do have a pretty good idea of locations, right? I just went over those with you. What they were, you should be writing them down in your notes, right? I'll have this up again in the morning. And be ready to execute at a high level. If you need to adjust your trade size for volatility, that's fine. Just make sure you're getting your extensions up and down in that while you're doing that process, right? So, anyways, that's all I have. I wanted to show you one other thing. Like even with NQ earlier this evening, right? You'll see as it was coming down. See how if you waited for, and this whole move down, right? If you waited till that trend line broke and it started trading sideways, the opportunities become much easier here, right? When we're in this free fall mode right here, even the small, like when this really started extending down, right? Notice the lack of lift. Notice the inability to get above the last swing high. Notice where the market actually picks off. Here's the point from which we get the last push down. Now you're 50-60, right? If this was regular RTH, now the 50-60 becomes very, very interesting place to get trade location, right? But we're waiting until that occurs, right, for the highest odds trades where you don't get annihilated. Anyways, I'm really tired. It's been a long day. I was really frustrated, and now we know why the frustration existed, right? Wanted to point out one other thing before I let it go. If I can find it. Nope. Oh my. Excuse me, guys. Here we go. CL. There we go. Okay, I want y'all to notice and I'm going to convert this chart, right? Here's the HVN. Okay, that acted as support earlier today. But remember, so you see this unauctioned, what's essentially an unauctioned area there, right? So I want to show you something. The mid of that unauctioned area right here, that ended up being exactly support in that flush down, right? So the mid of the poorly auctioned area, since it's a 24-hour market, we tend not to get support. The mid of that unauctioned area acted as support. And now if you'll look this evening, we've pushed down even further towards that 48. And ultimately we finished that unauctioned area right about here, right? So we are starting to move to the downside. If we look on CL, we are starting to roll our contracts. So we're starting to roll the I don't have CL open. Let me see if I can get CL real quick. Okay, here we go. So look, we see how we've now on CL earlier in the day when we came in we were above the 20 period. Now we're below the 20 on all time frames, right? And see how that finally enabled an impulse move lower, right? Once we got that done, and look where the move accelerated. Once we got below London's low, that move accelerated to the downside. So London's low was right there. Once we got below London's low, remember we had this area right off to the left that was acting as support. It was this prior session's low in the RTH, and we kept ping-ponging between here. So notice once we finally get underneath, right, the market did what it was supposed to do. That was a resolution of that. So this wasn't an impulse move within range, right? Notice that finally, look where the big bars and the smooth move to the downside comes from, is once we got under and held underneath those two prime areas, and you just got chopped to daylights within here trying to capture that. If you just waited till we held underneath, right? And if you'll look here on the indicator, we got overbought after we were underneath right here. Right here. And you see that bar closed right on the low. That bar closed right on the low from an overbought indicator, right? It would have been nice if it stretched just a hair lower, but that was the beginning of that downside roll. Also, there was econ after. There's a rig count, which helped that. But it's good to recognize what that looks like and how to manage that in the future. So anyways, I'm tired. Good night, guys. I'll see you all in the morning.